Indonesia was one of the worst sufferers of the Asian currency crisis in 97-98. It was then a dictatorship which was riddled with corruption and inefficiency, and it has since transitioned to a democracy with sound macroeconomic policies and significant market reforms, and it has a significant growth potential going forward. Indonesia's economy has been growing at more than 5% during last 7 of the 8 years. And the main reason behind this sound growth rate is the booming middle class, the rising demand by the middle class. The country has a population of 240 million, which is just behind China, India, and the United States. So the growing demand by the rising middle class is the main reason behind the growth in the economy. In Indonesia, the foreign exchange reserves are now about $110 billion, which is as of March this year. And it is up from just about $20 billion in mid-1997, that is at the time of the crisis, when the currency fell almost 7-fold. So at this level of reserve, the central bank is in a much better position to protect the currency using the reserves. So that is why the currency has stabilized a lot. And due to strong growth, the external debt has also come down from about 150% of GDP to about 27% last year. Indonesia was one of the very few countries which had a positive stock market performance last year. And in fact, its bond market was also the best performer in Asia. And economy grew at a very impressive 6.5% last year. And it is still projected to grow at 6.1% this year, as per IMF estimates. So I think the economy has been doing very well. In fact, during the recent quarter also, the first quarter of this year, the economy grew at 6.3% rate year over year, which is among the best growth rates in the world as of now. In Indonesia, about 65% of the GDP is domestic consumer demand driven. So that is why the economy is very much shielded from the global economic headwinds. And going forward also, I think this is going to be the main driver of the economic growth. Both Moody's and Fitch upgraded the country's credit rating to investment grade recently due to its sound macroeconomic policies and strong growth. Foreign direct investment has benefited a lot. In fact, last year the foreign direct investment in the country was 13.2 billion, and it may exceed 22 billion this year as per government's estimate. And during the first quarter, the foreign direct investment was 5.6 billion, so which seems to be in line with the government's target of attracting 22 billion in FDI this year. I believe that rising inflation, corruption in the country, and poor infrastructure are some of the main challenges for the economy going forward. Inflation has been creeping up. It's about 6% as of now. And the key to controlling inflation remains fiscal consolidation, which is a very difficult task in this country due to massive fuel subsidies. And I would also like to add that though the level of foreign exchange reserves is comfortable now at about $110 billion, the foreign exchange markets in Indonesia are thinly traded, and due to an open capital account, the currency remains very vulnerable to short-term capital outflows. I believe that worse than expected slowdown is already affecting the commodity exports out of Indonesia. And some of the policies, some of the very restrictive policies adopted by the government recently, they create an uncertain environment that may hurt foreign direct investments going forward.